On that note, ladies and gentlemen, we'd like to proceed with our next panel discussion on the topic, and this time the topic is Inclusive Growth Financing in India. Lessons of the past, learnings for the future. And we're joined by leading industry professionals to brainstorm on this topic. Please allow me to introduce each of them to you in no particular order. Our first panelist on my list is Ms. Indrani Banerjee, Additional Director, Learning and Administration at CAFRAL. Could you please give her a big hand? May I invite you on stage, Ms. Banerjee? Our next panelist is Mr. Navin Saini, Business Head, Retail, SME and MSME, Arka Fincap Limited. Please put your hands together for our panelists as I introduce them, ladies and gentlemen. We also have Mr. Shankar Tripathi, Executive Vice Chairman, Aadhar Housing Finance Limited. Please come on stage. Dr. Kumar Saini, Chief General Manager, 50. We also have with us Mr. Prashant Joshi, Managing Director, Head Consumer Banking, DBS Bank India Limited. And to moderate the session, may I call upon Mr. Mohit Gupta, Senior Director, Sales, Dun & Bradstreet, India. Ladies and gentlemen, please put your hands together for our eminent panelists and our moderator.
Which is more sustainable and take care of concerns around sustainability, planet, inclusion, and an inclusive growth for all. And during this 40-50 minutes time frame that has been allocated to us, because I know I'm standing along with my panel between you and your lunch, so we'll try to keep it sharp and short. I'd like to have the views of the panel, starting with Ms. Banerjee, who has been part of the regulatory body and now leads the trainings and the events which are organized for the bankers to understand how is the financial inclusion is driving the sustainable growth and what the regulatory changes have been brought in and what have been the major learnings from the past.
Thank you. Am I audible? Yeah. Okay. So I think talking about inclusive growth and financing, the first thing which comes to mind is that we have really come a very, very long way from the earlier days of, when priority sector lending was introduced, there was the lead bank scheme and the banking correspondent. Today, we have come to a situation where we have moved from just talking about providing basic financial services and account for every individual to more on the usage and quality of the services. So the whole aspect is how do you bring more and more people into the mainstream? And this obviously can't just be a supply side issue. It has to be demand driven as well. So therefore, you find that in financial inclusion on the supply side, you have a lot of institutions, not just the regulator, you have the government, you have a lot of other entities which are doing this. But at the same time, what is really important is that you have financial literacy centers, you have people who are, who are interested and who are coming forward. I mean, that is what makes it broad-based. So the financial products and services, they have increased over a period of time. And not only that, there have been, credit itself acts as a force multiplier. So what happens is when it is given to individuals and to businesses and firms, it obviously augments their productive capacity. They are in a position to make more investments. That has its own consequences. Similarly, backward and forward linkages are also generated. And one particular point which I would like to mention is the innovative approach to financial inclusion, which is what I think is driving the volumes, making it more equitable, broad-based, and obviously contributing to the overall development. So these are the models such as, for example, the SHG bank-led models, the JLG financing, farmers clubs. These are things where from the grassroots itself, the initiative is coming and people are being driven. They are being provided the finance, they are being provided the skills, job opportunities, everything is being done with the important point that this has to be a self-sustaining endeavor. It is important to realize this because otherwise there is no point in financial inclusion just providing somebody with something. And this is where I think the JAM Trinity was a game changer, which we are all aware, the Jan Dhan mobile Aadhar accounts, because that is what actually, pushed financial inclusion to the next stage. And today, as you know, there has been, even with RBI's initiatives, UPI, even everybody has a mobile, even those who don't have a smartphone, they are also connected, and recently over a period of time, they are also able to use the phone to make payments. So I think another important thing is creating the digital infrastructure so that the the benefits of growth, modernization. After all, we are going to soon we are one of the fifth, I think, the largest in terms of growth. We are going to move there. We cannot move there with just part of the population going there. It has to be all of us. They're all entire billions of our population. So that is where I think that a lot of the new things are happening. The other aspect is that on the financing side, certain new developments like a social stock exchange is going to be set up. NSE has been already given the approval. Now, when such a body comes into being, then there would be financing for social, environmental, digital, other kind of goals as well. So, so on every side, whether in terms of providing productive resources, in terms of providing finance, and the hand-holding which is happening. Obviously, I should not forget to mention MSMEs, because MSMEs are the very big, they are sort of leading in terms of whatever they have been doing and contributing to the exports and to the growth. Just the other day, this Udyam Assist portal, it was also, scheme was announced by the government to bring in the micro enterprises into the fold. So, a lot of things are happening. Without taking too much of time, because I think he's already asked us to be crisp. I would only say that, I would only mention 2 points which are worth thinking about. I still think, despite all the developments, there is still some kind of an imbalance between the demand and supply which is happening. Because I think there is a lot of supply, but there are a lot of funds which are utilized, which are still not getting, which are allocated but not getting utilized. So I think still on the demand side, there is a little, more which can perhaps be done. And of course, on the innovative side also, I think that, as more and more ideas come, we will result in having more of financial inclusion. I'll just stop here for now. Thank you.
No, I think I can very well correlate during my banking days when priority sector used to be a target on us, and we used to really struggle how to meet those targets. And then we used to try to fit in. If the guy has something to do with the ecosystem of the food industry, can we get it classified as priority sector lending? So I think those were like banks trying to manage the PSL books. But to the extent that where we have reached, I think it's heartening to see the coverage, and as you rightly mentioned about the Jan Dhan, which has been the game changer. I would also like to have view from Navin. How do you see, and is there anything different that you guys are doing?
So when we talk about inclusion, I think as Indrani rightly mentioned, 3 biggest things which has happened is one is on the opening of accounts. Second is reaching of credit to a large population of MSMEs, and of course the digital payments. But when we look at opportunities, and I was listening to the panel before us, I think we are still following a certain pattern. When it comes to lending, we still ask a lot of dated data. When it comes to these accounts were opened, but how do people transact in these accounts? How do we create a secure environment for these people? So I think these are certain things which need to be figured out if we really want this inclusion to happen. One thing I'm literally noticing nowadays, especially with this the new government, is that a lot of infrastructure is being built. So when we talk about roads, we talk about rails, and we talk about air connectivity, I think the inclusion will happen when these kind of infrastructures are also there. Because just imagine a person having an account and sitting in a place where it takes at least a day to reach, or any kind of telecom connectivity is not available. So the inclusion will not only happen with we giving them the power to open accounts or transact, but I think their commerce, the e-commerce through the physical infrastructure has also come into play. And what one of the previous panelists was mentioning, that two things I feel that every Indian has. One is the touch and one is the voice. I think we have to find out ways to use these two elements to not only create a secured environment for people who transact using these two things, and also build on it, because it will take some time to build that kind of infrastructure wherein everybody speaks in English or maximum one or two languages. People will continue to, now so much of data, so much of content is available in regional languages. I don't think people will start speaking English overnight. So when we interact with this kind of crowd across the country, and our country is a conglomerate of countries, if you may say so. So I think to eventually make them inclusive, we have to find ways and means to include these elements and how these can work for us when it comes to lending, when any kind of interaction or any kind of data points. I think this becomes very, very essential if we really want to do that inclusion as far as every Indian is concerned. Now, almost 80% of the Indians hold accounts, still a lot of dormant accounts, so I don't know how we will eventually make them start transacting on these accounts, number one. So much of digital payments are happening, but if the commerce doesn't increase beyond a point, these will just remain as probably the QR codes. Similarly for SMEs, I think they need to make their services and products reach every nook and corner, not only of the country but the world. So the physical infrastructure is also requires to come into play. So to make all this inclusive growth happen. And I am sure that if this happens in a way together, maybe in the next even 4-5 years, I think we are seeing at we are probably blessed to be in one of the best places as far as this world concerns.
No, I think rightly said, Navin. I think considering the length and breadth of the country, the diversity we have, it's not easy to achieve the objectives on the inclusive growth. But I think in last few years, the work that has been done by the BFSI vertical, I think a significant objectives have been reached, but I think there's a lot to be done.
Yeah.
I would like to understand from Dr. Singh, because SIDBI as an organization has always been providing that seed capital to the entrepreneurs, or taking those or providing that support to the SMEs. So sir, from your perspective, what are the new things that SIDBI is doing to support inclusive growth?
So what we realized 3.5 years back, that merely doing awareness and kindling the hunger will not do. So there should be corresponding availability of mentors, handholding agency who should be working along. So we started Mission Swavalamban, which is, Swavalamban is Hindi word of kindling entrepreneurship, and we call it, can we have a situation where each house has one entrepreneur? And we are working on this for last 3.5 years. Today we have been able to reach to around 450 districts with our partners. We have set up Swavalamban Connect Kendras in almost 300 districts, where anybody can make any missed call, and this agency will go back to them, understanding from them what they want to do. And as previous panelists were mentioning, we are concentrating on the Bharat part more, because that is where the inclusive story should be coming forth. And then we believe in 4 principles we have woven our entire strategy around is. The first is Sampark, means connecting the right nodes is very important. Then Samvad is the dialogue. understanding there, and everybody is talking about MLIs and all. So Sampark, Samvad, Sampreshan, dissemination is also very important. So few role models, sectoral, subsectoral, and passing it on to the other segment, which is looking up aspirationally, is also important. And last is Suraksha, which is weaving a security net around that, no, you will not fail, we are walking along with you. And so for this, like we are working with incubators, we are working on startups, we are working MF to ME transition. So we have worked a lot on microfinance part. But how do we transit the microfinance to micro enterprise? Like SIDBI itself came out with a proposal of Prayas, which we do 5 lakh to 50,000, means 50,000 to 5 lakh loans. And this is totally digital through our partners, some of the partners who were with us in microfinance story. See, microfinance story itself, NGO to microfinance to SFBs and some of the like universal banks. Same way, we are now working on, as ma'am mentioned, we are working on how do we transit some of the NGOs now to really onboard the social stock exchange. We have started a program which we call SWAR, which is giving voice. So here what we are trying to do is bring professionals and put them with these NGOs, and they work with them that how do they voice their requirements, how do they upgrade themselves. So this is one part. We are doing a lot of work on this side, and many tools we are utilizing this side, like Challenge Fund is there. We are working in interiors, tribal areas. We have set up a few institutions, like one we have set up with in Ladakh with Sonam Wangchuk, his university. We have worked in Northeast, we have set up another institution. Few incubators we have set up with IIMs and others. Then second enabler which we are working and which we started with the Stand Up India scheme was digital enablers. So MSME loans are not vanilla loans. They have a top of sort of approach. I call it butterscotch loans. So MSME has to be really attended in a different way. These are not like consumer loans, which you hand over. So here we started with a Stand Up India mission, which I think you must be knowing, where each bank branch was supposed to give one loan to women and one loan to SC/ST community. And so we had that time when we started, there were 1.25 lakh bank branches. So the target was each bank branch, so 1.25 lakh SC/ST, 1.25 lakh women to be given. And we made it totally digital. We started that thinking that how do we make it digital and bring out these non-financial enablers. So anybody can come on this portal. I would request you to visit. It's now becoming old but rejuvenated every time. So here you have project profiles, you have hand-holding agencies, whatever a person who is thinking of setting up a green field would require, we provide that. Plus, we also provide a matchmaking platform in terms of bringing associations and doing a concerted program at all India level through enterprise clinics, where we bring the banker who is being approached for a loan, the aspirant, and the hand-holding agency together. And most of the time we have found that communication is the only issue. So once we could do this properly, then we had set up Udyami Mitra portal, and now it is PSB 59. You must be aware, PSB 59 today, and we say now to any SME, why you should know any scheme. There are 500 schemes backpowered in this portal PSB 59. Nobody should know a scheme. They should lay down their expectation, and it will give you best 5 fit and the right bank connect. They have done more than 6 lakh loans. It is now one of the largest fintech. It is in fact empowering more than 20 fintechs are backpowering it. Coming to Udyami Mitra itself, you must have heard PM Swanidhi program for street vendors. Nobody thought that street vendor program means we can reach out to them. Today 40 lakhs loans have happened through Udyami Mitra portal in a very short span of a year or two. And we started with 10,000, 20,000 or 50,000 loans also they are getting. And this is what is the approach of inclusiveness, is where you built in that if you are performing right, paying right, then you are getting more access to funds. So this is the second approach. SEDBI has now, as ma'am mentioned, Udyam Assist, we are working, GST Sahai, we are working on several streams on that front. Third comes is MSME reside, they get nurtured, they grow in clusters. So we are working on a cluster intensive model. So cluster centric strategy, we are working both on the hard infrastructure side. So we provide support to state governments to set up hard infrastructure. And on the soft side, we have worked in more than 250 clusters, right from kindling the BDS market, business service providers market, to working on energy efficiency side. We have been working since 2005-06 on this front. So these are the various approaches we are working out, that how do we ease this and how do we include the excluded, if any, they are there. So like when we work with state governments, we have set up project management unit in 21 state governments, where these units are working out and suggesting, this is a pool of experts which sit with state governments, how do they revisit, rejuvenate and revive their entrepreneurship or MSME development policy. So SEDBI is trying to work at village adoption model, district adoption model and state adoption model. Country adoption model is anyhow being done through digital enablers. So to be very quick, this is the approach. You can visit our site, can know more. And even you can tell openly to youngies if they are looking for the way we are evolving, I think they can have access to these enablers. Yeah.
No, I think Dr. Singh, this is very, very informative. And I think while you were speaking, I was trying to absorb a lot of stuff that you spoke. I think the reach that you talk about, I mean, having something in Northeast, Ladakh, and banking the unbanked, talking about a 59 minutes loan where I think you do triangulation of data, is something, I think, a great stuff that you are doing. You also spoke about how do you help microfinance move to their next journey, and how, I mean, an influencer or a leader can help these small startups, the incubators, the programs that you have. I think very impressive. I think a lot to learn from you, and I'm sure audience would be looking to have more inputs from you while they network with you over lunch. Moving on to Mr. Tripathi, I think your company does a lot of work in terms of affordable housing finance. I would like to understand, and maybe the audience would be interested in knowing, what are the models, what are the new things that you are doing, and that can potentially lead to the inclusive growth. And that's to do the flavor of the discussion today.
Yeah, thank you. Before I start, I will give a quote. Poverty anywhere is a threat to prosperity everywhere. And in Indian context, what my earlier honorable speaker have discussed, a lot more has been done by Reserve Bank of India, Government of India, to ensure the reach, to see that the inclusive financing happens, because inclusive financing creates economic activities, which increases the economic growth, and ultimately it creates employment opportunities, and then the financial stability. These all are the components. When we talk of the economic growth and economic activity, one is providing access. One contingency, that is insurance, retirement benefits, then access to the accounts, which my other persons have discussed. And third is the most important, is the financial literacy, which Mr. Singh has already touched upon. Now coming next to that, having roti and kapra, what is more important is the house. And do you think that 90% of the working population in the country is in unorganized sector? Who will give house to them? They do not have a document to the income. They buy a house at the outskirts of city or in small town roadsides. So for them, ultimately when they earn their livelihood, their goal is to get a roof on their head. The Government of India is providing in the rural areas free of cost houses with cost of 1.25 lakh, something like that. But for urban areas, the Prime Minister Housing for a scheme was launched in 2015. And that scheme was a very comprehensive scheme which aimed at those who are in EWS, economically weaker section, that is having income below 3 lakhs, LIG having income from 3 to 6 lakhs, they need to be given the loan. And the institutional loan was very important to construct a house. In that backdrop, the public sector bank, the private sector bank, and more importantly, the affordable housing finance companies came up. Today, out of 100 housing finance companies, roughly about 65 housing finance companies focus on only low income segment. That is, means those income is less than 6 lakhs. They normally take loan of 5 lakh, 10 lakh, 15 lakh, 20 lakh, depending on. The whole problem comes for the economically weaker section, like vegetable vendor, bada pav wala, they don't have an income proof. And banking system still depends on the document to the proof of the income so that they can assess the requirement. Housing finance companies develop the capability to assess the requirement based on their activity and the personal interaction. If you take a person who is selling the books at the crossing, at any crossing, he also earns roughly about 1,000 rupees or 8,000 rupees per day. He also had the prepaying capacity. Why he can't take a house? The whole idea is that you should have a patience to assess the income. And once income is assessed, whether documents are there or not, doesn't matter. And if he wants to buy a house of 10 lakh rupees, 15 lakh rupees at the, not at the outskirts of Bombay, but outskirts of any small city, today tier 3, tier 4, tier 5 cities, there is a huge activity of housings are going on. So these persons are able to get loan without any difficulty. And more importantly, the government of India through National Housing Bank provide refinance at the cheapest rate. Today it is 4.9, it used to be around 2.9%, and roughly about 10.5% their loan is given. We give them loan at 14%, 15%, but once refinance comes, the cost of borrowing is get reduced for 7-year fixed interest rate that government of India is supporting. But it is only for the economically weaker section. The subsidy was available. Now the scheme is over. Subsidy was available from Government of India, 2.67 lakhs. That was improving the affordability. So you have seen in last 8 years, the large number of poor people, they have been able to get the houses. When there is a migration from the rural areas to the urban areas, the requirement of housing is important. And not only this, housing is the third largest employer in the country. It provides multiple, as Madam was mentioning, backward and forward linkages to around 240 industries, housing and infrastructure. So it is not only, I use the word employment creation, I use the word economic growth. So if housing is provided, it is ultimate of financial inclusion. What we are talking about, ultimate of financial inclusion, like Singh Saab was talking about, large number of micro units, they are providing huge financial facilities. Government has got many schemes like Stand Up India. So many schemes Government of India is having. So housing is ultimate objective, and public sector bank now, they are supporting housing finance company through co-lending model. We give the loan and they subsequently take in their books. So when we give the loan, we don't require too much of fund. The moment we sanction the loan, the PSU banks and private sector banks, they buy out those loans and keep in their books. The supply side, that is finance for us, is not a problem for housing finance companies. The banks are supporting. The ultimate consumer is able to have a roof on his head. And overall in the country, the large number of housing infrastructures are created, which ultimately is leading to the financial, the growth of the country, and everybody become the participant for that.
No, good, sir. I think a couple of things which I picked up from your discussion, from what you just mentioned is, I mean, once the proof of income is established, then documentation is something which can be taken care or can be lived up with before providing this sort of a loan to these people. And I think another critical thing which you mentioned is, initially it used to be roti, kapda, and then makan was the critical, then the housing. I think there is a fourth pillar that has got added to is data, which is driving the fintech revolution. And that drives me to my next question.
I just add one point. In 2019, the World Bank organized a conference on housing in Washington, and from India, 3 affordable housing finance companies were called to give a talk how they are able to break the mold. Break the mold means across the globe, everybody is giving housing loan based on the proof of income. People are not giving, but Indian companies, they have broken the mold. So we all 3 were the speaker there to tell the globe that these are worthy customers. I tell you friends, The informal segment customer, NPA is lowest. They are vulnerable to various shocks, but they have resilience to come back. If your maid, today you sack your maid, she get 2 jobs by evening. So therefore, their resilience is very fast. At the same time, they are vulnerable to shocks. For that, we take insurance and all those things.
No, so I think very impressive. I think people who have lost enough in life, they always have the ability to bounce back. And then you rightly said the lower class where I mean it's difficult to corroborate a lot of documentation, but you rightly mentioned the NPS there are very less. So it's very impressive the work that you guys have been doing, and very impressive to know that you were among the 3 companies being invited by the World Bank. So I moved to Prashant. I mean, I was just talking about data being now the 4th pillar. And of course, you have your own challenges being a multinational bank. So how do you see that the DBS is working towards this inclusive growth? And maybe if you can like to add a flavor of digital that really helps you to drive this.
Yeah, actually 2.5 years back, from being a completely digital bank, we also moved being a phygital bank. When we got the 500 odd branches of Lakshmi Vilas Bank into our network. And I think the 3 pillars here. One is the agricultural financing, which we never had done before, which we started. And we started by lending to agriculturists by helping them monetize their gold assets. India is the largest consumer, largest investor in gold. And we monetized those assets and started doing agricultural finance. And even within that, I think what we realized as what we actually hadn't thought about, even the rural and semi-urban households, the penetration of smartphone is about close to 65-70%. And the fact that our DigiBank account could be opened in 3 minutes, frankly, everyone could do it. The people who came to avail the agricultural finance, and we were actually surprised. So we were actually able to help deploy some tech model there, to at least increase the speed of delivery of credit. Right. So that's one. Second is on the all small traders, small retailers, small wholesalers. What we were able to do there was we had deployed a GST-based lending solution. Because frankly, in this business model of lower ticket credit, the biggest challenge is cost of acquisition and cost of assessment. As Tripathi said, frankly, the risk cost is less of a challenge. But if you can tackle the cost of acquisition and cost of assessment, I think that and cost of delivery of credit can significantly come down. So with the GST-based lending model, that we were able to deploy, today we are actually able to convey to an MSME a credit decision within 24 hours. Yeah. I think again that helped us, and we understood that segment much better. As you said, while we are a foreign bank, I think as we got into the network, that helped us a lot. So clearly both agriculturists as well as MSME financing, we learned a lot in terms of data. And while we may not know everything about, the good thing about being a bank is that once you have the deposit relationship of a customer, I mean, it's like you can learn so much from it. And when the earlier panel was talking about, I could relate to that. Because just from the account behavior, you can learn so much. Yeah. Again, that helps you increase the pace of delivery of credit. Yeah.
Yeah. And I think it really helps if you're capturing the cash flows, which is the account behavior. I think certain amount of credit calls can, of course, be taken. Yeah. I think the other important part of inclusive growth is how do we maintain the environment and how do we take care of the pollution emission norms, which brings to a very important concept of green finance. And that is where I like to have some ideas from ma'am in terms of how the regulators are thinking in terms of green finance. We do hear a lot of stuff banks are doing these days in terms of green bonds or I mean, they say that even the mutual funds have now allocated fund which they use only for companies who are compliant on the emission fees. So are there some initiatives being taken by regulator in terms of regulating this more? Are there any directions in terms of the instruments they want people to participate? So maybe if you can share your knowledge on that will help.
Yes, today I think this whole issue of green financing has come to the center stage, and The climate change risk, the physical and transition risk, these are perhaps one of the most critical risks which are facing banks. I mean, some of the newer risks. But at the same time, because there are so many dimensions to this kind of risk which banks are facing, we often call it a horizontal risk because, you know, it cuts across credit risk, operational risk, market risk, liquidity risk. And what is, heartening is that I think the BFSI sector, there is a huge amount of awareness now. And that is the first step, of course, because first of all, you have to accept and recognize the problem. Then only you can think of some interventions. So recently, the RBI, a few months ago, had conducted a survey in which they wanted to see what is the state of preparedness of the BFSI, I mean, actually banking, I would say. So a large cross-section of banks across public sector, private sector, and foreign banks were there in the sample. So, you know, there is no just one approach. Each bank is having its own approach. Each bank is at a different level of readiness to take on the challenges. And of course, there are certain common issues which all banks are facing across the system. So, some banks have already prepared a kind of a roadmap as to how they have to go about this whole thing, what should they do. The most important thing which was found is that at the board level, it is very important that there has to be recognition of this risk that a lot of work needs to be gone into. Why a lot of work needs to be gone into is because this is a new risk. Data points are sometimes not available. I mean, how will banks map the risks and provide for the risks and sort of integrate this into their risk management systems if they are not able to have the metrics in place to gauge and assess the risk? So that was one thing. Second thing is in terms of strategy. It is very important that a strategy has to be actually laid down. There's no, this can't be dealt in an ad hoc way. We are seeing it from our own personal experience that how the climate, shocks are happening in our own country for that matter, and of course across the world. So it has to be an inherent part of their risk management systems, which is why I think in banks, it is the risk management teams which are working quite actively on this, because maybe they have a better understanding of what really needs to be done. Then, of course, coming to the other aspects in terms of the products and all that, some banks, they are, issuing green bonds. Others, they are having, green deposits. A few private sector banks have even floated green deposits to create awareness, and, they are able to, I don't know to what extent they have really been successful. The Reserve Bank itself is very proactive. It has set up a sustainable finance group, which is fully engaged in all these efforts. Because as you are all aware, we have to achieve, our government has declared that we have to become carbon neutral by 2070. So there has to be, even at the country level, there has to be some steps. So the Sustainable Finance Group in RBI is coordinating all these initiatives. It is interacting with the banks, and then it is also laying down what all needs to be done. A discussion paper was floated, which is also available on the Reserve Bank website, which will give you all the details about what are the questions raised, what are the answers, responses, etc., which have been given. From CAFRAL also a lot of capacity building is happening. And in fact, we have been running the modules on climate change risk quite frequently because of the demand. And so people are coming, and I think the sharing of experiences is very important. Because in a new risk, when all banks are grappling in the dark, it is very important to share experiences, and banks are finding that very useful. At the international level, India is a member of the NGFS, or the Network for Greening the Financial System, so that we can also learn from the international experience, we can also contribute, so that is happening. Recently, you would have heard that the government has also announced the sovereign green bonds, which they are floating, and I think some amount, maybe 16,000 crore or something, has been already allocated for this year, this financial year. So there again, a lot of steps are being taken at the government level, at the regulator level, and we're all in this risk together. I mean, it is very difficult to say very much more on this because it's a new thing. And we don't know how it will pan out, and I think there's nothing else that we can do but to have a total state of preparedness. So for more on this, I would suggest you please look into the latest report of the Reserve Bank, Trend and Progress. You will get all the data on that. so that I won't take time reeling off data at this point of time. Thank you.
You would be, interested to know that there's a lot of work that DNB is doing currently on this. We have proactively gone ahead and rated our large part of our data universe on the ESG, and we are working with certain amount of certain funds and banks in terms of helping them with the ESG rating on the clientele, and also certain funds which are ESG focused. They reach out to us before they go and invest into those companies, because that's a benchmark that they have created. And we continue to work with a lot of companies in terms of helping them helping them their supply chain to come up the ESG curve. Because what's going to happen after 4 to 6 quarters, most of the large companies will be mandated by SEBI to have the ESG compliances. And at that point of time, when they have ESG compliance, not only they have to be compliant, their ecosystem has to be ESG compliant. And when the the ecosystem has to be compliant, you can't make your partners come up the curve day one. So it's a journey that they're undertaking now. And maybe after 4 quarters, 6 quarters, they will put up a threshold that if you don't score X on the ESG rating, you can't participate in our RFPs. So I think it's a collective effort for all of us, because it's the interest of the environment. And we have seen some of the recent catastrophes that have happened. So it's, I think, a combined effort for all of us to work towards the initiatives that helps the environment to stay
Right, right. In fact, SEBI, since you mentioned, I think SEBI has just come out with some guidelines this month for the issuance of green debt securities. So, I mean, every regulator is looking at these issues.
So good. I think I will move on to Navin. You would have seen, any lending model you have, there are opportunities and there are always threats to it. Just to give an example, like if you look at the supply chain finance, always the PSU banks had a nap to pick up the tier 1 suppliers. But tier 2 and tier 3 suppliers were never served. Okay. But now that gap is being covered by NBFCs and the fintechs. At Arka Cap, do you see any such initiative that you guys are running which helps you to help those people who are uncovered in the ecosystem, maybe in the supply chain or in the larger scheme of things? That's something unique about you guys.
So at Arka Fincap, we are fortunate to be a part of a large manufacturing setup. Kirloskar has been around for almost 200 years, and they have lent their technology, they have supplied their products to every nook and corner of the country. So they are very well connected to the overall, you can say, the hinterland, and we have found ways to work with them. Okay. So there are a lot of data points which are available when it comes to not only just supply chain, the final constituents of who people eventually use these products for, whether it is the pump sets or whether it is the compressors and the generators and whatnot. So, so we have found out ways and models to how we can find linkages and reach out to everyone who, how not only what are the patterns they follow, when do they actually buy these products, when do they actually use these products, and when do they replace these products. So, and also finding out how do they finance these products. So, so these are the ways we have started reaching out to each and every constituent of, and as Prashant was mentioning, here comes the rural part of it. Otherwise, a usual NBFC, straight jacket NBFC will never find ways to go and reach out to the rural entrepreneurs or customers. We are trying to find out ways to reach those customers and build on other data points as to how we can work with them and create a model wherein not only they are able to utilize this for certain capex, but also on an ongoing basis that when it comes to crop and the fertilizer and whatnot. So this is the initiative which we have taken. We are doing it on a very, very small pilot as of now, but we want to build big time on this. And moving on to the not only pure rural, I think the tier 4, 5, 6 cities where Mr. Tripathi also has a lot of customers there. So if they have the ability to own a house, what else they can do with it? Because when it comes to a single entrepreneur, it is proprietorship and the individual person. So we have to find a way to work with them and build those kind of models wherein if they own a house, if they own a two-wheeler, or if they have ever taken a gold loan, how we can give them more you can say finance, and work with all the transaction data which they have, whether it is UPI, whether it is bank accounts and whatnot. So I think the intent is there. I'm quite amazed when I be a part of this kind of discussion, like the organization like SIDBI and all doing so much in this space. I only wish that it just doesn't remain to portals wherein people have to go and do things. It reaches them in some form or manner, whether it is through digital means and all, because we need to make people aware. We may be doing a lot of stuff, including us also. We may be doing a lot of stuff at our end, but how do we make it reach to all those people who can eventually benefit from this? So I think the whole moot point remains is that one side we have a lot of technology getting developed, a lot of initiatives being taken by the government, but how do we make it reach to the ultimate beneficiary is the key point, and we are trying to do our bit. We have to find those linkages wherein we can also incorporate the good things which the Government of India is doing, which institutions like SIDBI are doing, Reserve Bank of India is doing, and then probably channelize it towards the end beneficiary.
Yeah, we rightly said, I mean, having an opportunity available or a facility available, but how do you disseminate? I think that's one of the objective of today's discussion, where you have the audience disseminating the information that is being given to us by Dr. Singh, Dr. Tripathi, and Prashant. I would pose a similar question to you, Dr. Singh, is in terms of how SIDBI is taking this as an opportunity, and maybe are there any challenges to it?
So what we have recently identified, and I'm heading that vertical, is how do we bring green to MSME? And so it's a big challenge, because as I was telling, it's like topping with cherry on the ice cream, right? And so people are aware this is important, but they are not amenable to investing in it. On the other side, the supply side, the banker feels like investing or giving loan, but doesn't know like how do we assess. So for example, we started a risk sharing facility program, which is now 7 years we have been running with World Bank support. And we have built a market of ESCOs, energy service companies. So they had a balance sheet which nobody could lend, but they had a technical prowess which they could do for implementing energy efficiency programs. And this is how then we started with this program today. Whatever portfolio in 7 years we have created, so whenever any proposal comes, it moves through a technical filter with our team. We have a team of technical experts. And then it is, in principle, is given to the institution concerned. So it is different from CGTMSC and NCGTC, where like whatever loans are eligible, they get covered. Here we do technical screening more strong way. And till now, whatever portfolio, though it was a very doubtful category, but whatever portfolio we have created in 7 years, all are standard, touch wood. So now we are moving into risk sharing facility program on the EV side, which is now emerging sector. On compressed biogas, we are working out. On solid waste management, we have already launched with GIZ help. On EV, we are working with World Bank and ADB. So similar such thematic engagements we are evolving, and SIDBI as a DFI, we try to create portfolio first ourselves, and then we onboard others. So like in risk sharing facility, nobody was coming forth, we created portfolio. Now today we have 14 lender partners who are availing under risk sharing facility. But what we realize is, as I mentioned earlier also, the finance will only come when non-financial aspect is really made stronger. So while globally, a lot of examples you see, we have been working in this ENS space since 2005-06, thanks to our multilaterals partner. But I'm telling you, the G is missing, because the major part of ESG, ENS we can inbuild, but the G is missing because it has to be really brought in. 90% plus is proprietorship. And how do you work on that front? So this is one area which we have picked up that we will be working in a focused way. And second is, so we have started a project grid program, which is we are going to adopt 50 clusters in next 3 years. Already we have started working in Moradabad and in Kota. Moradabad, you must have heard there are brass cluster is there. These are all household enterprises. And so they want to go for from coal to gas fired, but nobody wants to give them funds because they are at house. Household enterprises, they are not sort of approved area, they don't operate. But 90% of these people, we understand, have lungs problem because if they operate these coal furnaces. So we have already, what we have done is based on our ESCO program which we have run, we have brought 4 ESCOs and put them in the clusters. And we have told 100 transition, SIDBI would be bearing the cost. So we are working on energy audit, then transitioning from coal to gas fired, and then after 100 we will be withdrawing. And if the ESCOs find a market, we will be funding the ESCOs. So this is the model which we have adopted. We are going to pilot it by March 5, we would be doing, but next 2 years at least 50. On the financing side, we have schemes available from SIDBI fold. One is Srijan program, which is for right from startups to micro enterprises. If they are going for innovative technologies, we can fund them at a rate which is 3 to 5%. We have already supported around 40 such innovative technologies thanks to our partner TIFAC with us. So they do the technical part, we do the financial appraisal. Then we have end-to-end energy efficiency financing program, green financing program. So anything which relates to emerging areas of green, we are able to provide funding. In fact, recently we have come out with a digital enabler on PSB 59. We are taking assist from there. That up to 1 crore loan should be digitally done. We have already started doing that, and we'll scale this up. The idea is that something which was being done in say few days, we have to bring it down to hours and minutes. And so at least we have reduced the number of days. We would be shortly reaching that hour thing. Then one more program SIDBI has started is Mission 1000 Solar Rooftop, which is by this March we would be doing 1000 MSME, 1000 solar rooftop, 1000 crore SIDBI as earmarked from its own kitty. The rate of interest is best in the country because we are creating this market. If cluster level investments happen, we are providing much better rate of interest than what we provide normally. So this becomes the financing part. And on the non-financing part, so if any MSME, you tell that go for this investment and you will get this sort of saving, he doesn't believe. So what to do? Then we have launched a tool, Unnati tool. This Unnati tool is like self-health checkup. So we tell them, why don't you check up yourself by putting key parameters on financing side. You will get what, if you do this investment, what energy saving you will arrive at. This we are back powering with around 1200 energy audits we have done in the last few years and in 26 sectors. This is in collaboration with Bureau of Energy Efficiency. So that part we are working good way. Third comes, which is we have set up a green Indian financial system, GIFts, along with AFD France, Shakti Foundation and SIDBI. This is basically a thought leadership platform where we are initiating discussions which are going to be enablers for green financing. SIDBI has onboarded on all international platforms also to quickly pick the good practices and put it across, pilot it ourselves, then mainstream it. So our idea is we should, our dream is, I would say, we should turn green bank in next 3 to 4 years. So, or maybe 60% portfolio, at least in retail direct credit, should turn green. That is our endeavor. And we are also working on emerging as a carbon neutral institution within next year or two. We have already started walking the journey. So for us, green financing is a top priority agenda.
So sir, I think it's very,
so
again,
it's a challenge being converted into opportunity and so matching both.
And you rightly mentioned, I think the crux has always been on the governance piece, and smaller the organization, getting that governance piece right is really a challenge. And I'm sure the initiatives and the efforts you're doing, I think, that challenge should be also overcome.
I didn't tell about the today's which we'll do together in evening.
Yeah, so that's in the evening, right? In the interest of that time, I'll move to my last question, and that is to Mr. Tripathi and Prashant both, and that in that order. So any inclusive growth that has to continue, that cycle has to last long, right? And in order to ensure that this growth or the cycle continues, there always has to be refining in terms of the process or the policies, which means that probably from the past experience, what we have learned and what new things we are going to practice. So maybe at Aadhar, what your lessons learned and not to repeat those mistakes, or something that you have refined in your process where that allows you to be more or a better reach out in terms of the inclusive growth.
I think a very important question, because any inclusive growth cannot be only for a year or two. It should have a future impact. That's why sustainability will come. At Aadhar, what we have been doing, that is one thing we're talking about green financing, that in housing also started, though in housing the big builders and the middle class builders, they are still not in a very big way. But all low-income housing finance company, we provide loan for the self-construction. They normally make a independent house. There we get money from development institution at the lower rate. We pass it on to them. Even National Housing Bank provides us a interest refinance at a very consistent rate, which we pass on to customer to see that they have solar lights, they have proper window open, proper energy and efficiency they should do. That is one part. Second, with regard to our own processes, because the business has to be profitable. You cannot do any business irrespective of what charity or what good thing you are doing. It has to be profitable. The people, planet, and as well as the profit, these things are important. So we are massively going to the digitalization. Entire process is end-to-end digitalized. As regard the front-end customer service is concerned, our customers are still, all are not having a smartphone, but gradually the financial literacy is given by our people to them so that they deposit their installment, everything with them. So the cost of borrowing will come down by adopting green financing and the social financing, that is to include women in the housing. 90% of my customers are women. They are joint owners. And third important thing is that when my customer will adopt technology and digitalization, more importantly, it is not only they will be empowered, for us the overall cost will come down. That will make my company sustainable. We will be able to pass on the concessional interest rate to my customers also. That is the way we are looking to have a sustainable growth.
Prashant, your views?
Yeah, very quickly, I think any financing business, right, has three elements: growth, quality, and profitability. And the only time I think businesses have imploded or exploded is when growth was prioritized over quality and profitability. So as long as we don't keep making that mistake again and again, we should be all right.
I think that's very crisp. And that really helps on the time. Just to summarize today's discussion, I think inclusive growth, which is the agenda today, and the excess of capital when it comes to the BFSI fraternity, should not be restricted to limited corporates or large or mid-sized corporates or HNIs or the ultra HNIs. I think the objective today, and it's where the large part of our population is, where they may not fit into some of the criterias which are required by lenders, and how do we create an access of capital to them and allows them to be part of the growth journey. And we came to know some of the good work that Aadhar, you're doing it at the Aadhar Housing Finance. Some of the great initiative which SIDBI is running in terms of, how to bring in the MSMEs up the curve, MFIs to the next level. You also spoke about the women entrepreneurs, supporting them, the SC/STs, providing loans to them, and some of the work which Navin and Prashant are doing in their organization. So I think it's a great journey. This has to continue for a long. And of course, there are learnings from the past in terms of how to manage risk better, because as you guys rightly mentioned, the businesses can sustain if they are profitable. And for ensuring the organizations to remain profitable, you have to have your risk mitigants in place. At the same time, whether it's on the green initiative or whether it's on the inclusive growth, I think the journey has to last long. So with that, I think thanks very much to all of you for joining us. Thank you very much.
Thank you. Thank you so much.
Thank you, Mr. Gupta, and all our eminent panelists. It was really an enriching experience listening to all of you. We'd like to present mementos to our panelists. May I request Mohit to do the honors? Ladies and gentlemen, please put your hands together for Ms. Indrani Banerjee. Mr. Navin Saini. Mr. Shankar Tripathi. Dr. Ravindra Kumar Singh. And Mr. Prashant Joshi. May I request our panelists to get together for a group photograph, please? Thank you. Ladies and gentlemen, I'm always enthused about these stories about project managers, and this one's about a project manager, a hardware engineer and a software engineer who were in a project at Miami Beach, and for 2 weeks they were helping out on something, and during their lunch hours they'd like to take a nice walk along the beach during their lunch hours. And during one of these walks, they one day stumbled upon a lamp, and the hardware engineer picked up the lamp and he rubbed it, and as always, when you rub a lamp, there's a genie that comes out. So the genie says, I would normally grant 3 wishes to all of you, but since there are 3 of you, I'll grant you one wish each. And since he was holding the lamp, the hardware engineer went first. I'd like to spend the rest of my life, he said, at St. Thomas Island with, all the money in the world and all the beautiful women around me. And the genie granted him his wish and sent him off. The software engineer went next, and he said, I'd like to spend the rest of my life on a yacht in the Mediterranean. And the genie granted him his wish, and he went off. It was time for the project manager, and he says, what would you want? And he says, I want them both back after lunch.